major signals. How many people have seen the that basic candlestick presentation in the past? Okay, it looks like about 50-50. The reason I ask this is for very two important reasons. One, so I know how fast or slow to go in the presentation, and two, which jokes that I'll be able to use. So anyways, I got started with candlestick signals approximately 25 years ago by accident. I was a stockbroker prior to that. No jokes today. Okay. So when I was first learning candlesticks, I was out there all by myself. And what I told everybody a couple months ago was that usually it's better if you can learn a trading technique, getting second opinions from somebody so you know you're on the right track. But back then, I tell people the only time let's see, my microphone too loud. The only time I was getting second opinion back was when I'd go to the doctor. I'd say, "What's wrong with me?" And he'd say, "You're fat." And I'd say, "Well, I think I'd like a second opinion." And he goes, "All right, you're ugly too." So anyways, I learned everything I could about candlesticks. But what I found out was that that you didn't have to learn all 50 or 60 candlestick signals. There was 12 major signals, which we went through last time. This time, what we're going to try to do is, again, I've written 3 books on candlestick analysis. The basic published with Wiley and Sons was how candlestick analysis should change your viewpoint of how the candlestick analysis works more toward prices moving based upon perceptions. I tell people prices do not move based upon fundamentals. They move based upon the perception of fundamentals, and candlestick analysis is the graphic depiction of those perceptions. Then I wrote my second book, was telling you the high profit candlestick patterns using candlestick signals and the accumulation of those signals to show you which patterns were not relatively strong, have a high probability of being strong. And then recently, last couple of years, I wrote a book on that even if you have the right trading technique, if you don't have the right mental attitude, or if you've got flaws in your mental thinking, candlestick analysis pretty well eliminates those flaws by just going with the probabilities. So what we're going to do today is we're basically going to go through the high profit signals and patterns in kind of a quantified basis. I'm constantly asked questions on which signals work the best. And the answer is they all work well, or we wouldn't be looking at them 400 years later. But there are some that you can have a little bit more confidence in, and so I'm going to try to quantify those. And so what we're trying to do is try to learn the simple logic that's built into the signals and patterns that are likely to give us much bigger gains. As we know, all boats rise in a rising tide. We want to figure out which boats are going to rise a heck of a lot faster in that rising tide when the investor sentiment is in our favor, and which signals are going to work, or patterns are going to work the best. So that's what we're going to go through here, is what are our best signals and patterns. The nice thing about candlesticks is that it tells us with a very clear graphic depiction of whether the bulls or the bears are in control, obvious by the trend and by what type of signals we're seeing. We can do very good trend analysis by analyzing what's going on in the market when there's toppy signals and when there's bottoming signals. Are you going to write a book about the minor signals? That information's in book number 1. And what we want to do is kind of move away from the minor signals, because a lot of times the minor signals don't occur often enough for you to even spend your mental time and energy learning them. If you learn the 12 major signals and the psychology that created those signals, once you identify the confirming indicators and the signals, you're going to be putting the probabilities of being in the right trade at the right time greatly in your favor. And then on top of that, if you understand the psychology that created that signal, you pretty well have an understanding of any seasoned trader out there that maybe has 30, 40 years of experience behind them. The indicators, somebody's asking, are candlesticks lagging indicators? No, they are forward-looking indicators, probably the most forward of all. And I tell people, if you've got a successful trading program, put candlesticks on top of it and understand what the signals are telling you, and you're going to dramatically improve your analytical ability. All right, so yes, these slides, I think Morgan has a way where we can get these slides. Plus, when we get to the end, we're going to have one of those offers that you can't refuse. So don't worry, you'll get, and don't bother taking notes because we're going to go too fast. So we can see when there's toppy signals going on in the market. We can see, as we saw in the Dow a couple months ago, a big morning star signal at the bottoming. So let me go through real quick of what indicators we're looking at on here. The big red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. The gray line is the 20-day simple moving average. The reason we have these on our charts is because every major money manager around the world uses those parameters to make their decisions about their portfolio positioning. We have the capability of seeing exactly what's going on in investor sentiment at those levels. They become very strong technical support and resistance levels. But here's the most important one. This one you can make a big note on your notepad if you've got one. This is the 8 exponential moving average, which we call the T-line. And the T-line has a very simple factor. If you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. Conversely, those are simple moving averages, the 20, the 50, and the 200. The T-line is the 8 exponential moving average. Very simple. If you see a morning star signal or a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close below the T-line. The T stands for trigger. That's our trigger line. So I know you probably get a lot of people showing you how great they did with this move and this move. We're not interested in that. We're interested in this information right here. What's telling us that this information or this move is about ready to happen? So what we're going to do today is we're going to go through the bullish signals. Steve, we're going to get to all that. Don't worry. And there isn't that great a difference between the 8 EMA or the 8 SMA. It's just the 8 EMA works very well for us. We're going to go through the bullish power signals. Now, those power signals are, one is your best friend, left-right combo. I'm not even going to repeat them right here because we're going to eventually get through them. So the first one is your best friend. As you might recall, for those that saw the last presentation, the most popular of all signals is what we call the Doji. And the Doji is where prices open and close at the same level during a specific time frame. A long-legged Doji is when the price move is big. Now, the time frame can be anything. Candlestick signals work just as effectively on a daily, weekly, monthly chart combination as they do on the 1-minute, 3-minute, 10-minute chart combination if you're trading E-minis. A long-legged Doji is when the price move is big during the time frame. And for time frames, I'm going to use daily because that's what most of these charts are. Dragonfly Doji opens at the top, trades down all day, comes back up, closes right at the top of the trading range. And the Gravestone Doji is described by the Japanese rice traders as the warriors coming out of camp, going into battle. By the end of the day, they're beaten back into camp, leaving their dead all over the field, thus the Gravestone Doji. Oops, I lost the charts here. A derivative of the Doji is a spinning top, where it has a little body. It looks like a spinning top. But all of them have one basic characteristic. It shows that there's indecision going on between the bulls and the bears. And that's very important information when you're looking at signals and patterns. So if you're using the Doji, this is what we call your best friend. A Doji in an oversold condition, and my oversold condition is stochastics. And I use stochastics of 12.33. Obviously, if it's above 20, it's overbought. If it's if it's above 80, it's overbought. If it's below 20, it's oversold. So the Japanese rice traders have a very simple philosophy. If you see a candlestick buy signal in an oversold condition, start watching for a trend reversal. If you see a candlestick sell signal in the overbought condition, start watching for a trend reversal. But your best friend, and this is the most strongest and probably most profitable high probability trade, if you see a Doji in the oversold area followed by a gap up, it's time to be buying aggressively. And also, look at this chart, see a Doji followed by a gap up and a close above the T-line, you want to be a buyer. Now, I've had people in the last few weeks ask, well, how many days does it take you to confirm that you're in an uptrend? In candlestick analysis, it's 0. All you're trying to do is see what the signal tells you and whether it's being confirmed. Yeah, it's slow stochastics. Now, stochastics are only a indicator. They're not a trading mechanism. All we want to do is see where is the signals occurring. Are we in an overbought or oversold condition? Obviously, a buy signal in the overbought area doesn't mean much. A sell signal in the oversold area doesn't mean much. We're looking for that buy signal in the overbought or in the oversold area. So anytime we see a Doji in the oversold area, we're starting to watch for buy signals. And if they gap it up, that tells you the information exactly what you're looking for. Stochastics 12.33. Now, that's not anything set in stone. The only reason I came up with 12.33 over the last 25 years was I just tweaked my charts to see when did the stochastics match with the top and when did the stochastics match with the bottom. 12.33 for the time or the type of trading I do seem to work the best, and it works the best for whether I'm trading on a intraday basis on a 1 minute, 5 minute, 10-minute chart combination, or swing trading, which I usually do on a daily chart. So anytime, again, a gap up in the oversold condition from a Doji, you want to start taking or start getting into that position. Inverted hammer, Doji, gap up. This is your best friend, especially if you can analyze what's going on here. This is enough force that if they break out through this downtrending channel, you're now heading for the next target area. Let's see. I'll try to answer questions. I don't know how much time we have today. I'll try to finish early enough where I'll get as many questions answered as possible. How big a gap up? Just a gap up. What does a gap tell you? And a lot of people are told don't trade gaps because most money managers say you don't know what's going on with gaps. Candlestick signals and gaps are your best friend because we know exactly what's going on with the candlestick signal. There's indecision down here. If they gap it up the next day, what's that basically telling us? It tells you not only were they indecisive down here, but they made their decision and they made it with good force. That's usually going to lead to a much higher price move. Let's see, was that one we looked at? This one. There's your Doji, Harami, meaning the selling has stopped. The next day they gap it up. This is where you want to be buying. And also one caveat about the T-line, which I should definitely explain. Again, a buy signal to close above the T-line tells you you're in an uptrend. There's one caveat to that. The further away you move from the T-line, the higher the probability you're going to go back and test the T-line. So if I see a candlestick buy signal in the oversold area a good distance away from the T-line, and it opens positive, I'm buying because I know where my first likely resistance level is going to be, which is the T-line. If it gets up here and fails, I'm going to see that as a failure signal with a candlestick signal. I'm right back out. So I'm possibly even making money on a bad trade. But essentially, I'm looking at the probabilities of what's my signal telling me. I'm anticipating it's going to close above the T-line and give me a good trade. So when I'm looking at the optimal criteria for getting into a position, first of all, I want to check to see what the signal is, because that's my number one criteria, is what the candlestick signals are telling us. Where are my stochastics? Is there a gap up from a Doji or any other signal, and is it closing above the T-line? Again, there's a number one, do I have a signal? Number two, do I have a gap up? Number three, is it closing above the T-line, and is it staying up there? The further away from the T-line, the higher the probability you're going to start an uptrend. Gaps don't happen that often. I'll argue with that. Every single day, you're going to probably find somewhere in the trading entities of 7,500 trading entities out there in the market, very simple scans will find the Doji followed by a gap up. Again, anytime, remember, if you're seeing a bunch of Dojis, that's telling you basic information. There's lots of indecision here. But bam, when they gap it up, that tells you somebody's made a decision, and that decision is probably not going to be a fast-moving decision. That's probably going to be a long, sustained uptrend. There's been a change of investor sentiment from this point. Flat, indecisive trading. Remember, one of the best signals is if you see a series of Dojis, this tells you there's a lot of indecision going on. If they gap it up and take it in one direction, same thing with a gap down. I'm just showing the bullish side here. These all candlestick signals work just as well on the downside as they do the upside. See, we did that one. So this is what I'm looking for. This is my message down here. Notice where my stochastics are. They're down in the oversold area coming up. If I see a Doji followed by a gap up, I'm buying, because do we always get big moves like this where you're making 5, 10, 15, 20, 30% on the next few days? Not always, but the probabilities of being in the right trade at the right time are greatly in your favor, because you may not have any earthly idea why they're buying this stock, but somebody's out there buying it, and that's exactly what the signals are telling you. Again, do we always get a big 40% move in 2 days? Not necessarily, but we're in the position where if that type of thing is going to happen, our probabilities of being in the right trade at the right time are that much stronger. Spinning top Doji, gap up above through the T-line and the 50. The T-line, again, is your 8 exponential moving average. Let's see. Yeah, gaps, don't occur intraday. Intraday you're not going to see that many gaps because of the flowing price move. Doji, gap up. When they get through these moving averages, where do you think the next target is? Up to the next major moving average, and what do we have up there? As you recall, we said that if you see a Doji in the overbought condition, right at a resistance level, it's time to take profits. That's where everybody else is watching to take profits. Notice this Doji just touched the 50. The next day they gap it up through the T-line, starting a very strong uptrend. Do you wait for a close below the EMA as a stop or a break? Depending on where we are, that's a whole different story. Now, the nice thing about candlesticks is that it tells you when to buy, and it also tells you when to get right back out. I've told people many times that for 35 years, I've listened to professional investors tell you to cut your losses short and let your profits run. But in that 35 years, I've never heard them tell you how you cut your losses short and let your profits run. The Japanese rice traders have come up with very simple techniques for stop losses. And it's basically just common sense. Everything in candlestick analysis is just common sense put into a graphic depiction. What minimum time do you use candlesticks? 1 minute chart. It works on Forex as long as you find out what day or what you want to use as a time frame. Since Forex is a constant, you might just use the end of one day going into the next day. I think there's a 45-minute. A gap to me is where they close it here. Usually they open it above any of the previous day's trading, but it doesn't necessarily. It just has to be a gap away from where they closed it. Essentially, all you're trying to do is see what is the investor sentiment from that Doji. It works for futures. I trade commodities all day long. It works, and I've got some charts on here, I think, that will show some of our trades that we use for option trading. Candlestick analysis is merely the graphic depiction of what's going on between the investor sentiment between the bulls and the bears. Let's see. All right, yeah. Let me zing through this, and I'll try to. If I've missed your questions, which they're running by so fast, we'll get to them at the end. Gap up off the T line tells me there's still more upside. The bigger the gap up, the higher the probability you're going to be in an uptrend. The bigger a candlestick signal, the higher the probability you've had a definite change of investor sentiment. So if I'm watching this Doji, where do I enter? If they gap it up, I'm buying immediately. Now, if it's a big gap up, like 20, 30, 40%, I might buy half a position. If they start taking it right up, I'll buy the other half. Now what happens on these big price moves is what we call the 45 degree, which is, you can see it moved up 45 degree, and also you could sleep well at night as long as it didn't close below the T line, you stayed in the position. All right, another Doji combination is what we call the left-right combo. And the left-right combo is a Doji followed by a bullish engulfing signal. Doji's that little left jab. The big roundhouse right is the bullish engulfing signal. Told you there was indecision here, and then they told you which way they were taking that decision. That usually leads to a very strong price move. If you see it occur where you can use other parameters like the moving averages as support levels. Here's a left-right combo right on the 50-day moving average. Next couple of days are above the T-line, makes for a very strong price move. Again, these are probability situations. Nothing's set in stone. All this is giving you a graphic depiction of where you can see that a change is occurring in investor sentiment. And if they didn't work, we wouldn't be looking at them 400 years later. The Japanese rice trader family that developed candlesticks did not become wealthy in Japan. They became legendarily wealthy. They were the powerhouse for hundreds of years in the financial area. The color, the T line is black on this one. So right now we're seeing a left-right combo right here, close above the T line. Notice there's been times where they gapped it way down below the T line and brought it back up. Just one simple rule, stay with it until you see a close below the T line. Right here, Doji, 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 bullish engulfing, left-right combo. Starts your next uptrend. Do you have a scan for Dojis and gaps on both sides? Yes. Very simple scans, whether you're using Metastock, Ninja Trader, Warden Brothers. Everything that you can see on here or describe, if you can describe a Doji, which opens and closes at the same level, followed the next day by a bullish engulfing signal, which you can describe, you can write the formula very simply. TOS, yeah, TOS, they haven't done anything with me. We were in contract, when Tom Sazanoff still owned the company. He and I were just getting things set up when he sold it to Ameritrade, and Ameritrade attorneys have just never come back after that. So this one, oh, okay. gone ahead here. So anyways, a left-right combo, especially followed by a gap up, is going to have very strong results. Now here's a very strong signal, what we call the Doji sandwich. And the Doji sandwich is very simple. If you see a bullish candle and a Doji, there's a very simple rule of a Doji. And the simple rule of a Doji is the price is going to move in the direction of how they open it after a Doji. So if you see a bullish candle, a Doji, and they open it positive the next day, you're buying immediately because this candle here will be at least the same magnitude as this candle right here. Call it a Doji sandwich because you got big candle, Doji, and another big candle sandwiching that Doji in between. And after that, not only becomes a very good system to day trade, that you know you're going to have a high probability trade the next day, but as a swing trade or a long-term investor, the results of a Doji sandwich usually occurs, or the results are usually going to be a strong move after that. Doji sandwich, close above the T-line, Doji. Very simple to use a Doji. We know it's going to move in the direction of how they open it after a Doji. Is it going to, this trend going to fail here at the 50? Well, if it opens positive, no. If it opens negative, yes, you take your profits immediately. I use daily charts when I'm swing trading. I use intraday charts. My 10-minute chart is my bellwether chart when I'm trading commodities or currencies or that type of thing. So if I see a chart like this, where notice how this has bounced right off the 50, Doji, starting bullish confirmation above the T-line, big candle day and a Doji. This was Friday's close. If this opens positive, I'm buying because I know I'll probably have the same move as this day right here. Yeah, Dr. Frank, yes. This was always the rhetorical question that I used when I was learning candlesticks was, why isn't everybody using candlesticks? They're the most, I want to say, researched and utilized system in the world. They're approximately 400 years old, and the reason they're around today is because nothing has changed in investor sentiment. Investors' sentiment is the same as it was today, as it was 100 years ago, 300 years ago, and it's going to be the same next week, next month, next century. Investor sentiment does not change. All we're looking at is the graphic depiction of what goes on between as investors make their decisions at different portions of a trend. Now, a series of dojis also creates a very strong price move. If I see a series of dojis, notice this whole chart setup. Stochastics near the oversold area. Doji, 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 doji. Bunch of indecision. The next day, they tell us which way they're going. They're going bullish, number one. Number two, they've closed above the T-line. Number three, very simple entry and exit strategies for candlesticks. What do we want to see the next day after a confirmed buy signal? We want to see the bulls are still there. So if they're coming in after they buy signal, I'm buying immediately because what's that doing? Not only has it closed above the T-line after a series of indecision with stochastics coming up, but it's telling us this downtrending channel isn't working anymore as a resistance. So I've got wave one, wave two, start of wave three. Do I know how big wave three is? Usually about the same magnitude as wave one. I stay in it until I see a candlestick sell signal and a close below the T-line. And if I'm in a strong uptrend and they close right back up above the T-line, I'm backing that trend until I see a close back below the T-line again. Doji, doji, doji. Close above the T-line. Then they gap it open the next day, got a candlestick reversal signal, and they gap it up through where? Through this downtrending resistance. That tells me I've got a strong upside. Yes, but the question is, do you wait for a pullback to get in? No. What does a pullback tell you? It tells you the bears are starting to come back in. I want to be buying into strength because if the signal tells me the buyers are in control, I want to be buying as the buyers are there, not waiting for it to come back. And if they're coming back, that tells me there's sellers still there. I don't want to be in that trade. I want to be in a strong buying trade. Doji, gap up through the T line. Just gives you an alert to start watching for a buy signal. Anytime I see dojis followed by a gap up, notice what this one did. Closed above the T line and broke out through this level. Tells me the probabilities are extremely high that I'm going to be in an uptrend. I better zip along here because we're only 1/3 of the way through. Morgan, what is my cutoff time? Any of the signals that are followed by a gap up, you want to be buying, especially coming out of a oversold area. So, all right, we're going to go through the speed course here. Bullish Harami tells us the selling is stopped. Where do most people sell? They panic sell at the bottom. We're looking for the candlestick buy signal. Where do you want to buy? You don't want to be grabbing for that fallen knife. Candlestick signals make it very simple. Not only do they tell you the selling is stopped, but they're anxious to get back into that trade. Here's the strongest signal of all, the kicker signal. Kicker signal is very simple. You're in a downtrend. They open it here, close it here. Then they gap it up the next day and go the opposite direction. They've essentially kicked the investor sentiment in the opposite direction. So whatever created this signal is not a temporary thing. It's definitely changed the investor sentiment. It's usually going to create a very strong price move. The bigger this gap up, the stronger that move is going to be. Anytime I see a kicker signal, when is it time to buy? As soon as I can see that signal, I'm going to grab as much money as I got somewhere in the account and start buying that signal. It's going to be a strong uptrend. So this is a very simple down day. The next day they gap it up. You shouldn't see any trading below the open, but even if it does and closes up here, it still tells us the same message. There's been a dramatic change of investor sentiment. This, again, a kicker signal breaks out through all the moving averages. Definitely want to be a buyer. The bigger this candle is, the higher the probability you're going to be in a good strong uptrend. Gap up, a kicker signal. I don't know what the probabilities are for a kicker signal, but they're so extremely high that anytime I see one, I'm in it immediately. Or I'm buying calls on that situation. Again, you don't want to see a tail to the downside, but as you can see, the result is the exact same thing, that there was some immediate profit taking, and then the bulls started taking control, creating a strong uptrend. This one's right now. We just recommended this one, let's see, recommended this one on Friday because there was a kicker signal. If it opened positive, we want to be in it. We still want to be in this. Notice what it's done. It's kind of breaking through this downward tops. Strong enough force that it's probably going to have a good strong move from here. Now, a derivative of the kicker signal is what we call the flutter kicker signal. And the flutter kicker signal is you see a gap up the next day, but it just does a doji. So if you bought, you shouldn't be concerned, because if it opens positive after a doji, what's our simple rule of a doji? We know it's going to move in the direction of how they open it. So if I see a flutter kicker setup and they open up positive the next day, I'm buying immediately because I know they're going to go positive. And the flutter kicker signal is if you took the doji out of here, you'd basically have a kicker signal, which is going to cause that strong uptrend. Anytime I see a down day and they've gapped it up and done an indecisive day above the previous day's open, I'm ready to buy on a positive open the next day. The steady eddies are very good, which is what you can use your the T-line. The Japanese rice traders say, let the market tell you what the market is doing. If I see a close above the T-line and it can't close back below the T-line, that steady eddy is, I'm going to stay with it until I see a sell signal. On a pullback, I'm looking for the next close above the T-line because the market is telling me once it gets above the T-line, it stays above the T-line. This one, same scenario, closed above the T-line until there was a sell signal, came right back to the 50, did our Morningstar signal, closed above the T-line, took it right back up again. This is not rocket science. This is just watching to see what the investor sentiment is in any chart pattern. The bigger the signal, the higher the probability you're going to be in an uptrend. Doji, big gap up, you're going to be in in a strong uptrend. The bigger that signal is, the more likely there's been a change of investor sentiment. Okay, let me flash through some of these that are just, anytime I see a gap up, especially through a resistance level, a lot of people say, I don't want to buy a stock that's up 5, 10, 15, 20, 30, 40%. I do if it's coming out of the site. Yes, thank you, Will. My website, Candlestick Forum, we have a chat room that's open all day long. Get lots of good trades coming out of there because everybody's looking for the same patterns. We usually have around 150, or let's say 175 to 225 people in there each day, coming up with very good trades. I put out 2 or 3 stock picks each day, just to put picks out so that people can not have picks but see what the rationale was for buying that that pick. So if I said we want to buy XYZ on a positive open, it's because we have a Doji sandwich set up. You're still in the learning process. No, I don't have any association with Steve Nissan, and I don't know whether he really likes me because I'm kind of a competitor. And I don't make an opinion about somebody else's trading for 2 reasons. I don't want to make an opinion until I've walked a mile in their shoes, again, for 2 reasons. Because if I say something that pisses them off, at least I've got a mile head start, number 1, and number 2, I've still got their shoes. So anyways, I put out stock picks every day, not so that you have stock picks to trade, but because it still gives you education on why you should be in things. I don't want to be giving people stock picks just to have picks, because if they don't learn why they're in it, it doesn't do any good. It's like the cop that's standing on the street corner, and he sees this drunk weaving down the street in his car. He blows his whistle, pulls the guy over, walks up to the window, and there's a penguin sitting in his back seat. And he says to the drunk, why the heck do you have a penguin in your back seat? He goes, oh, I found him out on the street, and I don't know what to do with him. The cop said, well, take him to the zoo. And the drunk said, oh, that's a good idea. I didn't think of that. Well, the next day, the cop's standing in the corner, and here comes this car weaving down the street, blows his whistle, pulls the guy over, same drunk, looks in the back seat, and there's a penguin sitting there. He goes, I thought I told you to take the penguin to the zoo. The drunk said, I did, and he liked it so much, today we're going to a baseball game. So if you don't know the reason of why you're doing something, it doesn't do you any good. So learn these simple techniques, and you're going to be way ahead of everybody else. The bigger the signal, we also have what we call a double doji. This is an indecisive pullback. If it opens positive the next day, it's still going to continue the uptrend. Let's see. These high probability trades, if you see a signal breaking out through a resistance level, makes it very easy to see when it's time to be buying based upon a buy signal, a bullish aroma, gap up, and then they traded above this level, you're starting into a next wave. Blue ice failure, fails it, comes down through the ice, fails, goes down to the next level. Very high probability trade. If a doji means indecision, a long-legged doji means much greater indecision. Kicker signal. That starts the uptrend. What's our uptrend telling us? That we're probably on a J-hook pattern. Very high probability trade. We have expected results. When you have that kicker signal right at a resistance level, tells you there's no resistance level there anymore. Then we have a doji sitting right on the 50. What's that tell us? It tells us if they open it lower, they failed at the 50. If they go through, they're going up further. If they open it positive, they're going to have a doji sandwich day. All the signals do is give you patterns that are going to be high probability patterns that you can trade, and know that every time you put on a trade, the probabilities are in your favor. You're going to make money. Rule of a doji, right on the 50. If it opens positive, you want to be in the trade. Rule of a doji. If you see a doji in the overbought condition and they gap it down, you want to be out of that trade immediately. Doji in the oversold area, they gap it up, you want to be back in that trade immediately. Let's see, we're starting to get, so there's common price movements where we can see exactly what's happening when you pull back to moving average. Let me get down here to, this is the type of thing we're looking for, is the patterns that give us big price moves, and the T-line is the one that helps us make that decision. That once we get in a trade, we might be fooled out of it, but as long as it keeps closing back up above the T-line, you want to stay with it. Your best friend, gap up through a T-line. Let's see. Let me just go through the fry pan bottom real quick. This is the fry pan bottom that if you see it break out through this side, that you're going to have a strong price move. Also, there's a little dimple. If you see that little dimple, you can measure when to get in, so you're not sitting here in a dull trade for 3 weeks. If this is the first half, right about here is where you start buying, because two things are going to happen. It's either it's going to fail and you're in a trade that failed for a couple of days, or it's going to go through and you're going to have a big upside. This is the classic. We know the fry pan bottom produces very strong price moves. We also know very strong price moves produce a J-hook pattern. So the classics is if you break out from a fry pan bottom and have a strong move and you start seeing profit taking, you keep the chart right on your screen, and when they come back in, you've got a J-hook pattern, and we know if this is wave 1, this is wave 3. How many minutes do I have left, Morgan? 10 minutes, all right. Fry pan bottom, J-hook patterns, these are just extremely high probability trades. Let me go down here. Fry pan bottom, you don't have to sit in it the whole time. If you know this is the top of the fry pan bottom, how many days are you going to sit waiting for it to break out? You don't have to. You put your buy stop just above this level. You know, if they break out through it, you're in the breakout. Anytime we see it break out, which is usually notice there's a little gap up over here that broke you out through this level. Nice strong move in bond not too long ago. These are the big moves that have made us tons of money, what we call the slow curve, a derivative of the fry pan bottom. When they break out, you've usually got a very strong price move. This is where you buy your calls right about in here, because if it moves, it's going to be a big move. If it fails, you're right back out of the trade. Rounding bottom, this was back in January. This just happens to be one. We were buying the calls here at, I think it was 240, sold out here at 870 just a few days later. So whether you're trading commodities, options, anything, you're going to be able to use candlestick analysis to put the probabilities of being in the right trade at the right time greatly in your favor. There's about 5 patterns that we use. One is a scoop pattern. We look for the breakout out of that scoop pattern. But what candlestick analysis basically does for you, and I'm going right down here to the final trades, is we can do the trend analysis. Let me see how far I went past here. Where are the markets going? Well, we can see in the Dow, we had a Morningstar signal. Stayed strong until we closed below the T-line. There was a pullback. A bullish engulfing signal right here on the 50. Stayed strong until last week where it closed. Now we have another J-hook pattern in the making. Probabilities are we're still in an uptrend. If we can analyze what that's doing to the markets, we can analyze which stocks to be in. We were right now had bought the calls for the ATHN a few days ago because it was doing a little scoop type pattern, slingshot effect. It's probably going to go to 100. We can analyze the markets by the NASDAQ also doing a left-right combo, a Morningstar signal bouncing off the 50s, stochastics coming up. The probabilities are strong that we're in a J-hook pattern here. We're in an uptrend. If that's the case, we're buying stocks like this on Monday if they open positive. If this is wave 1, wave 2, wave 3 is going to take us up for a good trade. Do we catch every major signal? No, we're trying to catch the probabilities where if this is wave 1 and this is starting wave 3, we've got a good uptrend. There are times when we can catch trades like this. Do you often see a trade where you can get in at 15 and get out 2 days later at 45? Definitely not. But the probabilities are that you're in the right position at the right time. Do these trades, you see trades like this often? Not very much, except we were in KER just a few weeks ago, did the exact same thing. We knew to be in it after the breakout, got out up in this area. So that's about all I got. I can't do live charts. I'm stuck on Camtasia, but this is the offer that you can't refuse that you've probably seen before. For 12 measly bucks, you will get our set of 8 hours of the 12 major signals, 45 minutes of each signal, going into fine detail of where they work, how to identify them, what confirming indicators make them work best, and also understanding the psychology that created those signals. But wait, there's more. I always like to do that because I stay up late watching TV. This 12 major signals is worth 85 bucks. 581 bucks. You're getting it for 12 bucks. But you also get a 30-day free trial to our website. Our website is thecandlestickforum.com, and there's the link. Morgan, you put in, okay, Morgan put in the link already. I do commodity picks, not officially, but I'm usually showing in the chat room what commodity trades I'm in. But for 12 bucks, you get a free trial. We have a website that's working every single day during market hours. Monday nights, I do a special session for a couple hours for members, showing which signals are working right now, the best in the market, what the commodities are doing, what the currencies are doing. We have an open session on Thursday nights. We used to sell a lot of CDs, but what we do for members now is instead of selling CDs and you're trying to learn it on your own, about 2 or 3 times a month, we will have training sessions for members where we'll go through an hour of training on stop losses, entry and exit strategies, how to scan for the best trades, things that you want to know, but we do it live. That way we can do question and answer sessions. So anyways, now, the caveat to all this is for 12 bucks, you're signing up. We're not trying to fool people into signing up to the Candlestick Forum because our normal monthly fees is $97 a month. So we're not trying to fool people into signing up and then all of a sudden they're being charged $97 a month. After 30 days, you're going to get a email saying, thank you for being doing the trial period for the Candlestick Forum. Click here if you want to opt out, or click here if you want to stay in. So, anyways, my modus operandi is for the dollars that you're spending on our website, you're going to get tons more information than you ever expected. Now, as I said early in the session, candlestick signals you can trade by themselves, or if you've already got a trading method, if you lay candlesticks on top of it, it's going to be a heck of a lot more clear for you to understand what you're looking at. Okay, let me see what questions I can take. Usually I end the session by telling people, which they've often heard of, that you don't have to overanalyze in candlestick analysis. All you have to do is be able to analyze the signals. It's like the lady that brings her parakeet into the vet, lays it down on the table and said, oh, this has been my best friend for years. Can you help my parakeet? And the vet says, well, ma'am, I think your parakeet's dead. And he goes, oh, no. She goes, oh, no. Isn't there something? Please check. He's been my best friend. So the vet goes out to the back of his clinic, brings in a cat, lays the cat next to the parakeet. Cat sniffs the parakeet, looks up at the vet, kind of shakes its head. And the vet says, ma'am, I'm sorry, but your parakeet's dead. I have to do the same one as a laver because candlesticks don't change, so I try to make the jokes not change. And she goes, oh, this is terrible. Isn't there something else you can do to check? And he goes, all right. So he goes out to the back of his clinic, brings in a great big Labrador retriever, comes bounding in, puts his paws up on the table, sniffs the bird, looks up at the vet, kind of shakes his head. He goes, ma'am, I'm sorry, but your parakeet's dead. So they go out to the front desk. He goes, well, that'll be $250. And she goes, you're charging me $250 to tell me my parakeet's dead? He goes, no, ma'am, I would have done that for $18. Then he wanted a CAT scan and a lab report after that. So I tell people you don't have to overanalyze candlestick analysis. It's all simple, common sense put into a graphic depiction. I was one of the worst investors in the world. I was a stockbroker for 8 years and got out of the business because I realized that the analysts on Wall Street didn't have any idea what made stocks go up or down. All their job was to find a company that's supposed to be doing good in the future. Candlestick signals tells you exactly what's going on in investor sentiment right now. So whether you're a swing trader, a short-term trader, or a long-term investor, you've got charts that's going to tell you exactly what's going on. So, all right. Morningstar signal. The Morningstar signal, where was it? It's right here. Morningstar signal is a big down day, a day or two of indecision, and the third day comes back up more than halfway up this candle. This is called the Morningstar signal. That tells you there's going to be good daylight coming out after that. The offer will probably expire Monday night, but I guess I have to ask you this, Rich. Is $12 going to something you have to make a major decision on? $12 is supposed to be a laydown. You don't even have to think about it. What about volatility on an intraday time frame? If you're trading, if you're buying based on a candlestick buy signal on a daily chart, you sell based upon a candlestick sell signal on a daily chart. Everything else in between is noise. Let's see. Yeah, let's see. I think we can make arrangements with Morgan that if you need a copy of this, you can get it. Which of your books, the 12 major signals, is the books? Is that my beep time? And I run over time? Let's see. Trying to do these work? Let's see. Hold on. I've got to slide this up. All right. If you're having trouble signing up for my pad, just go to, and then if you're having trouble altogether, if you just email Abraham at Candlestick Forum, tell him you were in Morgan's session that you'd like to sign up for the 12 for 12 special, he'll get you set up. Are all candles presented today in your candlestick book? No, there's more. You've got the 12 major. We did the 12 major signals a couple of months ago. This was more advanced of what the higher profit trades are used in combination to candlesticks. I think this is being recorded. For an engulfing candle, does the top and bottom have to be greater than the previous day candle, or can it equal to one side can be equal to the previous day, but the other one has to exceed it? Are candlestick signals invalid unless used in conjunction with the T-line? No. The signals, remember, the Japanese rice traders probably did not have the T-line when they were trading rice. The signals are your number one criteria. Anything else is just confirmation. It just improves the probabilities of being in the right trade at the right time. I did it. Okay. Thank you, Larry. My best $12 was probably a bottle of scotch. I'm not supposed to say that. I told somebody one time when we did a goof up, I said, oh, shoot, I shouldn't do this. I shouldn't be drinking before I do one of these sessions. And they wanted their money back because they didn't want to be taught by a drunk.
All right, great.
Most people know I don't really drink.
Thank you, Steve. And Steve, it's always a pleasure to have you on here. So again, Morgan, excellent job. And like I said, for $12, you basically get 30 days access to that. And in addition to Steve's jokes for a month. So thanks again, Steve. Always a pleasure to have you on here. At this time, I'm going to turn things over to our next speaker. Very excited. This is actually Scott's first time being at the Trading Pub. So everybody give him a warm welcome. And Scott, if you can Scott, if you can go ahead and get a copy of, if you can go ahead and get your screen sharing going. Yeah, correct. At the end of the 30 days, you will get of Steve's offer. At the end of the 30 days, you'll get the chance to either stay on or renew. So it's up to you guys. All right, and I'll post that link one more time. All right, Scott, if you want to do a quick audio test and go ahead and come on and get the screen sharing going. Looks like his screen is up. Can everybody see